Hey everyone, welcome back to Corporate Decoder, the place where we try to understand what companies are really up to. Today we are diving into HealthStream's latest financial report. Think of it as trying to decode a doctor's handwriting, but with dollars and cents. I bet you think a company named HealthStream delivers medicine intravenously. I sure did. This report tells us how HealthStream performed financially over the past 3 months. We'll break down the key numbers and see what they mean for the company's health. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below, so come join the discussion. First off, let's take a look at the balance sheet. Think of it as a snapshot of what the company owns and owes. We are looking at numbers from March of this year and comparing it to the end of last year. The company's cash jumped up from about 59 million to 77 million, an increase. Cash equivalents are assets that can be converted to cash quickly. It's good to see the cash position going up, indicating more financial flexibility, although the numbers are still pretty low for a company of this size. Accounts receivables also up a bit from 38 million to 30.8 million. These are bills that haven't been paid yet by customers, but more importantly, deferred revenue, which is money they've already received for services they haven't provided yet, is way up from 84 million to 102 million. That bodes well for future revenue. Now let's switch gears to the income statement, which shows how profitable the company was over the last 3 months. Again, we are comparing this year to last year. HealthStream's revenues, the total amount of money they brought in, are up slightly from about 72.8 million to 73.5 million. A small increase, but still growth. Net income, which is the profit left after all expenses, however, went down from 5.2 million to 4.3 million. So while they made more money, they also spent more, resulting in less profit, about a 17% decrease. Net income per share, a key metric for investors, also dropped from 17 cents to 14 cents, which roughly mirrors the overall drop in the profits. On the upside, it looks like the dividend increased slightly from 2.8 cents to 3.1 cents. Now we get to the statement of cash flows, which shows how money moved in and out of the company. Net income is where we begin, which we know was about 4.3 million. We see some familiar names show up. Depreciation and amortization are accounting terms for how assets reduce in value, and those showed about 10.7 million, almost exactly the same as last year. The big highlight is the huge jump in operating activities. Net cash from operating activities, which is the cash generated from their core business, is up significantly from 20.9 million to 27.1 million. That's excellent. Also, the company seemed to reduce its investment profile and investments into new factories and equipment. Let's go to shareholders' equity now. Here, again, we see the declared dividends were almost negligibly higher than last year, meaning that overall shareholders ended up with a slightly better deal than the year prior. Moving on, let's look at what HealthStream actually does. They provide software, mainly for healthcare organizations, that helps with things like training and scheduling. They operate as one large business with no individual segments that management particularly focuses on. Most of their revenue comes from subscriptions, which means recurring and reliable income. It accounts for 96% of their revenue. The company's effective tax rate, what they actually pay after deductions and credits, was about 17%, down from 20% in the same quarter last year. The company's board of directors declared a quarterly cash dividend of 3.1 cents per share. The company also announced that it might buy back some of its shares, which can boost the stock price. They invest in US Treasury securities, which are generally considered safe investments. The company has a revolving credit line, which is basically a credit card for businesses. They can borrow up to 50 million if they need it, but they didn't use any of it this past quarter. After the quarter ended, the board of directors approved a plan to buy back up to 25 million of the company's stock. This is often seen as a sign that the company thinks its stock is undervalued. One of the biggest risks is the uncertain economic environment and its impact on the healthcare industry. This includes things like potential government cuts to healthcare funding and rising costs. They explicitly mention how these conditions may impact their business. Now for my overall take, HealthStream is facing some headwinds. While revenue is up slightly, profits are down, and that's never a good sign. However, they have a solid subscription base, which provides a reliable income stream. The big jump in cash from operations is encouraging, but it's important to see if they can maintain that momentum. On the positive side, the stock buyback program could provide some support for the stock price. On the negative side, the risks related to the economy and the healthcare industry are real and could impact their future performance. A key aspect for HealthStream HealthStream will be navigating the issues within the medical and healthcare sectors. Overall, HealthStream appears to be a company in transition. It has some strengths, but also some challenges to overcome. Alright, that's our breakdown of HealthStream's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.